All right, guys and gals, back in business here this evening. Hope you all had a fantastic start to the week. But it's time to get back to work. The note time is ticking. Monday evening, October 26, 2020. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a jam-packed video in store for you tonight. Charts are all prepped up in the background, as you can see. Got the E-minis, got the oil, and got our gold on our radar for tomorrow. Boy, speaking of tomorrow, 1 week ahead of the election here in 2020. Got a lot of news this week. Got a bunch of big moves on the charts today. Got a lot to talk about and a lot of great setups we're watching for tomorrow's trading session. Before we jump in, though, and get our hands dirty on the plan for Tuesday, I just want to make sure to remind you guys, if you haven't done so already, make sure you subscribe to our YouTube channel. That way you don't miss all the good stuff we publish every evening on this video newsletter. So make sure you subscribe. And don't forget, if you have any questions for me, any questions, drop those questions in the comment section below. I'll get them answered as soon as we finish with the video here tonight. And as always, if you tune in every evening, if you like this video as much as I enjoy making it, always appreciate you guys and gals hitting that thumbs up for us here on this nightly newsletter. So again, make sure you subscribe. We publish this video every evening. Get ready for the following day. Don't miss it by subscribing to our channel. Hit that thumbs up if you like the video and drop those questions in the comment section below. But enough of the introduction. Charts already in the background. Let's take a look at what happened here today. Boy, a lot to cover here in tonight's video newsletter. Of course, over on the gold, right? Gold is range bound right now. Multi-day trading ranges, range bound markets right now basically tell me to buy low, sell high. We're talking failure patterns. We're talking breakout patterns for tomorrow on the gold. We're going to break down a pretty straightforward plan, trade that bullish and bearish trading range here on gold for tomorrow. Speaking of bearish, boy, oil just tumbling lower here. It's pretty much a bear spike and wedge right now on the oil. Looking to sell short, looking to basically sell into the pops here on oil for tomorrow. I'm also watching for one more leg lower on oil tomorrow. So we're looking forward to possibly a breakdown. Got a big wide open space down below us here. And then over on the S&P, boy, S&P took a nosedive today. It went all the way back to that big high from earlier on in the year, the February all-time high, and took a big bounce, as you can see. Now, there's a lot of bears in the market right now, right? VIX spiked this afternoon. VIX now above 30. A lot of bears in the market, a lot of fear out there in the markets. COVID cases spiking this afternoon. So we're expecting to see a retest of this low, but I'll tell you, it might be easier if we get a reversal tomorrow. So I'm keeping an eye out for a reversal on the S&P. I'm not quite convinced of that yet. I'd like to be a seller, but as you can see, we got that rising support trend line. So I got to get a little bit creative to trade around that here tomorrow. Got a great plan on the E-mini. Got a great plan for all of these markets here tonight. Before we jump in, though, into these charts, let's grab a look at the calendar for the rest of the week. As I mentioned in the introduction, we do have kind of an interesting week here. We got the end of the month, right? Last few drops of the month of October, right? End of the month is actually on a Saturday, right? So last day of trading for the month of October is on the 30th on Friday. End of the month, what does that always mean? That always means increased volatility. So we do expect to see increased volatility as we go into the end of this month. What else do we have going on right now? Well, just in case you haven't been paying attention, there's an election next week. In fact, as of tomorrow, we become 1 week away from the election next Tuesday on November 3rd. Don't forget they changed the clocks, by the way. Daylight savings time ends on Saturday this coming weekend, right? Not so much trading related, but be aware of that, right? We're going into a very transitionary time of the year right now, right? Daylight savings time ends here in the U.S. this weekend. Election is next Tuesday. As you can probably assume, right, and you correctly will assume, the market's going to get a little bit squirrely, I would think, right, ahead of this election. You'll see a lot of trading firms positioning themselves, right, to kind of take advantage of both up and downside positions, right, in the market. So we're definitely expecting to see some increased volatility because of that. I wouldn't be surprised if gold continues its range here this week just because, right, of that potential, just kind of wondering what's going to happen, right? That kind of unknown situation early next week. Stimulus. Stimulus pretty much died on the table last week. It does seem like a very low probability of stimulus at that point, but stimulus, fiscal stimulus right here in the United States and really around the globe right now as COVID cases, you probably saw the headlines today, are spiking. They're not talking much about more deaths. You'll notice that, right? The news media seems to be kind of plugging away at the number of cases. So it's tough to tell how much the markets will really react to that overall, but man, we saw them really nosedive today. So whether or not that was the reason for it, we've got a lot more higher numbers with COVID cases right now. Again, they're not talking about deaths, just cases, which is where I think the markets may start to find some common ground there here as we go this week. And then later on this week, a lot of earnings reports coming out, specifically on Thursday regarding tech companies, right? The whole FANG stocks, right? Coming out on Thursday for earnings. So, man, oh man, what a busy week here. End of the month, increased volatility. Election next week, increased volatility. Will we hear more about stimulus? At this point, it seems like it's dead, right? At this point, will they bring it back from the dead this week? That is something we are watching for or listening in for this week. And again, as we get later on in this week, we got Big Tech Thursday, right? A lot of tech companies, right? So of course, NASDAQ traders out there, be aware Thursday, right, is potentially going to be a pretty crazy ride of a trading session. In addition to that, on Thursday, we get the ECB meeting, right? ECB announcement on Thursday morning as well. So quite a busy week here this week. And you'll notice there's a lot of news here, right? Tomorrow, Tuesday, October 27th, we've got durable goods at 8:30 Eastern time. We've got some more home prices at 9, and we got consumer confidence at 10. Just a peppering of news tomorrow. So we're looking forward to a pretty darn good day tomorrow morning in our trade room. And don't forget, right? Don't forget, we open our trade room up 8 o'clock Eastern time every morning. We'll have a front row seat for that durable goods orders report at 8:30 Eastern time this morning. You know, as always, what I'll do is I'll put a link for you guys. I'll put all the links we talk about tonight in the description of this YouTube video. Grab that link down there and get registered as a new member and come out and join me tomorrow morning at 8 o'clock Eastern time. And we'll have a front row seat for that durable goods orders. And of course, we'll trade around all the way through that 10 o'clock consumer confidence. As we go into the rest of the week this week, we got trade, we got inventories. GDP might be the biggest, right? The biggest news of the week, right? Pending any announcements regarding the election or pending any announcements regarding stimulus, GDP and jobs on Thursday. Potentially the biggest news of the week here this week. And of course, personal income on Friday. So a very, very busy week. Expect to see some ranges. Expect to see some volatility here this week because of the election. And of course, the end of the month, volatility kicking up. But tomorrow, though, don't be late to the market tomorrow, right? Durable goods orders at 8:30 Eastern time to kick us off tomorrow morning. And again, I'll put all the membership links you guys need to get registered in the description of this YouTube video. All right, so schedule, we got that under control. It's going to be a busy week here. It'll be a busy, busy week here. And of course, the election next week, right? Next week coming at us really, really quickly here as election day is looming. So schedule is pretty, a busy, busy schedule. We'll make sure we sort through it every morning in our trade room. Let's grab some charts. Like I said, we got gold in a range right now. Oil is pretty much in a range. And that S&P, let's grab the S&P here. S&P took a big nosedive today. Now, it's tough to tell what exactly caused this. Maybe it was the record-breaking, spike in COVID cases. Again, they're talking about cases, typical news media right now, right? Trying to make things out to be a lot worse than they are. Not to say it's not a bad thing. I'm just saying if it was really bad, they'd be talking about deaths. It's not. That's the one thing I'm looking forward to seeing the rest of this week, what the market actually thinks about that, because the market's always right? The news media can fan the fear flames all they want by talking about every little sniffle, right? Every case that gets reported. We all know by now there's a lot of testing going on around the world. The testing is everywhere now. So of course, there's going to be a lot more cases to it. I want to see how these markets actually how they react to this. Do they actually believe, right, that is a really, really big problem? What may have happened is, right, the market may have been spooked. We get obviously a spike in the VIX today. The market may have been spooked by the fact that we came out this morning and there was no updates regarding any fiscal stimulus. I would imagine that is probably what really spooked these markets. Home sales this morning came out just fine. A little bit of a downtick in the home sales, but nothing, nothing too crazy. So as far as news events go, it seems to be that lack of fiscal stimulus in the market, of course, tumbled lower. Now you're wondering where they went to. They went all the way back to that prior all-time high in mid-February, right? If you recall, right before the lockdowns happened, right? We were pushing up to those all-time highs mid-February into early March, and of course, what hit the fan and the price tumbled. This is that 33.64 half area. So what it looks like to me, we saw just a complete bloodbath, right? After the, again, spooked markets, the lack of any stimulus coming, doesn't seem like that's going to be happening here anytime soon. We take off to the downside, and they go all the way back to that prior all-time high, and they bounce hard, right, off of that prior all-time high. Now, at the time we saw this morning, or into the afternoon, I was hoping we would get a 1, 2, 3 reversal, and we could trade this thing back up to fill that weekend gap. Because that weekend gap up there, that's Friday's close. That will be a magnet for the rest of this week, right? So there's a good chance, but at some point Wednesday, possibly tomorrow, right? Wednesday, Thursday, Friday, we end up all the way back up to where we came from. The problem I have right now is we're not bullish just yet, right? We are a bear market at this point. That's why I said in the introduction, it'll almost be easier if we can complete this reversal, right? Get the reversal, get the bulls back in control here, and we can start to kind of think about, right, getting long on this thing. The problem right now is whatever the cause is, the why really doesn't matter. We are very bearish on that move lower. And as we always talk about in the newsletter, right, I'm okay to be a buyer off a bounce, but they have to hold this, and they've got to jump off the moving average. I just don't think we have this reversal just yet. It doesn't look like it to me. It's close. I'll tell you, these bears are hanging on by a thread. So I do think we're bearish. I would assume tomorrow, whenever you see this much of a strong move in one direction, whenever you see this big of a move in one session, the chances are very high you're going sideways the following day. So I got my range planned out here, right? And again, if you're talking about straight numbers, right? Straight odds, the odds of a sideways day tomorrow are pretty darn high. Now, again, this may have just been a spooked market, right? Because of that lack of stimulus plan. Maybe it's the COVID cases. I doubt it is, right? I'll bet it's that lack of stimulus, which means this might just be a buy the dip moment, right? And it might be a run back up to where we came from. So expect either again, the odds say it's probably going to go sideways tomorrow. So we do want to be ready for that, right? We may also see this thing gravitate back higher here, right? Because of this, I don't want to say overreaction, but, a little bit of an overdoing it to the downside, hitting that prior all-time high at 64.5. So how do I sell this market right now, right? That's kind of the big question. How do we sell it? Because I'll tell you right now, it's very tempting to draw a trend line off these highs, bring it down off that low. It's very tempting to want to buy the low, right, of that new hidden channel. That would bring us in to pretty much a nested failure pattern. The only problem I have with this is and again, you can get to see where if I was going to be a buyer right now, that's exactly where I'd be looking to pull the trigger, or, right, wait for that 1, 2, 3 reversal, and I would gladly draw my new channel, find that new channel, and buy off the low of that channel. So there's plenty of ways to get long right now. The problem is we don't have the proof that we need, at least not from what I can tell. We don't have the proof we need to really be confident, right, this market is a bull market. You look left out here and you'll notice, right, there's that prior low back there. They might be waiting to get up here and run this thing right back down again off that prior low. So I just don't think we have that 1, 2, 3 reversal pattern just yet. What we do have is a strong move down into what looks to be like a range coming tomorrow. And again, if you're looking at the the numbers, the pure numbers, the odds are very high when you see a very big move down in one day. The odds are pretty high. The market has to catch its breath and will go sideways the following day. So knowing that, right, knowing that alone and knowing that the buyers have not taken full control again, I've got my trading range. The range acts as a magnet. I take the size of that range, and that helps me find my resistance zones above and my support zones below. The goal in a range-bound market is to buy low, sell high, and focus on failure patterns. So in other words, right, as the market goes higher, I look for buyers to try and fail, and I sell it back down again. As the market goes lower, right, again, when there's a range, I wait for the price to go below the range, I wait for sellers to fail, and we buy back up into the range, right? We buy low in the buy zone below, we sell high in the sell zone above. We stay away from the middle, right? That's the magnet, and we focus on failure patterns, right? Buyer failures back into the range, seller failures, right, back up into that range. That's the overall idea. And again, we'll keep our eyes open for a possible reversal. So my biggest problem right now is we have a lot of, and again, I realize we are all bearish right now, but how can you look at this chart and not think that's a really strong move higher? Again, it's just a little bit underneath the threshold to be a reversal. And that could change over the past couple hours or the next few hours overnight. But as of right now, though, I don't have enough information to really call this a bull run. I would call this a bear market with a strong bounce off the low. And because of that strong bounce, again, I would anticipate a lot of buyers trying to get in, kind of gambling in right off the low of that channel. So what I'm going to do is I'm going to try to play that against them. Basically, if I want to be a buyer right now, right? And again, I may regret this, but again, right now there's not enough evidence of being a bull right now. If I was going to be a buyer right now, I would wait for a pullback underneath the low of the moving average, right? I get down to the low of this channel, and what I would do is I would look for a seller failure, right, into a bullish pullback combination, right? So that's what I would look for if I was going to be a buyer right now. I would wait to get sellers roped in under the moving average, and I would buy into their stop losses, buy it again on the first pullback. Right? I call these failure into pullback combinations. Now, again, this is what the chart tells me. I don't think we're bullish yet. I think the bears, because of that strong move down, anytime we see that much strength in one direction, the odds are very good we retest those lows the following day. Again, it's a snap back up to fill the weekend gap, right? Maybe they are going to take this thing back up higher here, but I'll have to wait for more proof on that. So what I'm going to do is I'm going to try to see if I can get those bears to come in, right? Get them to sell short, and then I'm looking to basically sell right into their entries, right? That's my plan to get short for tomorrow. That basically kills two birds with one stone. Not that I recommend throwing stones at birds, but what it does is it allows me to sell above the range. Right, which is first job, number one, right? Use the range as a magnet. That's one thing it allows me to do. It also allows me to anticipate those buyers coming in, right? Because if I try to sell right now, for all I know, they'll take my head off. Right? Again, momentum is just strong enough, I think, to get buyers interested. So my plan is I'd like to get down around those lows, see if I can get those buyers to take the bait getting short. See if I can get those buyers to try to buy into that failure, and I'll look to drop it right in their lap, right? Literally selling into the stop losses of those buyers. And if you look closely at this, what this actually does is it allows the buyers to try once, it allows them to try twice. It's what I call a nested failure pattern. One of my favorite go-to failure. Remember, when it's a range-bound market, you focus on failures. Now, this can get a whole lot easier if we were to sink back down and get stuck inside this range for a while. If we go back inside this range, now all we got to do is wait for those pops up, wait for those buyers to come in, try to buy the pullback, and we can sell into stops with those buyer failure patterns, right? So again, I can use a failure pattern above the high if we can see us going sideways tomorrow. The hard part's going to be if the market just collapses back down. Because at that point now, that range overhead will likely become a magnet, right? It'll be a sticky magnet there, right, as we try to go lower. So if we do go lower, I'm going to have to wait for a strong move down, wait for that pullback, and wait for a what I call a 1, 2, 3 breakout or breakdown, mark up that low, mark up that high, and I can sell off that high, right, of that 1, 2, 3 breakdown, right? Going to be tricky here if it goes back to those lows. Because it goes back to the lows, right, we may easily see it back up into that range. So that's my plan for the sell side. And by the way, guys, my failure patterns, my nested failures, all those patterns, I cover all of those in our free trading course. So if you're not with me tomorrow morning in the trade room, what I'll do is I'll put a link that will pop up there in the upper right-hand corner. Grab that link. Pause the video if you want to, but grab that link, get registered for our free trading course. And as part of that free trading course, you'll learn all my favorite entry setups, like my failures, my nested failures, and my reversals and breakout patterns. So again, looking to basically trap the trappers, right? Looking to basically sell into, right, those buyers getting long off the low of that channel, right? Avoid the middle of the range. Or if we do sink back into the range and go sideways here overnight, that just simply creates that trading range. Wait for that pop higher. Wait for those buyers to come in, try and fail. Again, focus on failures. This is a range-bound market. If the market really tanks, you got to remember they're trying to get back down to retest that low. We're going to have to run, pull back, and show me you want more. Right? You got to show us you want more. Get that jump. Remember, 1, 2, 3 jump, right? 1, 2, 3 really jump. Then I can mark that low, mark that high, and I can get short off the high, right, of that new kind of hidden channel, as we call it. Where would the next leg down be? Where is the next leg down for the S&P, right? The next big leg down is at around 3,300. If you look left here, right, next big leg down here is down around these 3,300 areas. So that will be where I would expect bears to be hunting for. But, right now, though, again, right now, we're just looking for a retest of that low from yesterday. So now we've talked a lot about the buy side here. How could I be a buyer on this right now? What would it look like to be a buyer here on the E-mini? Well, first of all, where would the buyers trying to go? They're trying to go back into that big range from last week, right? That big range up there, that's a huge magnet for the bulls. 34.40, right, tomorrow morning or tomorrow for the bulls. The weekend gap, again, Friday's closing price, that will be a magnet all week. I realize I'm talking about selling right now, but I would not be surprised, right? I wouldn't be surprised if we go back, run down to those lows, get a nested and take off at the upside here and fill that weekend gap. Would not surprise me whatsoever with the election, right? And only a week away, and stimulus package pretty much dead on the table right now. So what do we need to be a buyer? There are really kind of 3 patterns I'm watching for right now to be a buyer. The one I would be looking for mostly is, give me a little bit more momentum going higher. If I can push through these pendulum swings up here, right, the amount of the move below the range is the amount of the move above the range. If I can push through those highs up there, and if I can get some momentum going, like I said, I like the idea of being a buyer. I do, in the bigger picture right now. Well, the problem is though, that's not enough momentum. So if the buyers can give me a nice jump and really run now, perfect. Now let's grab that high, let's grab that low, and now I can start getting serious, getting long, right, off the low of that new hidden channel. Right, that's one thing to keep an eye on. What oftentimes happens is you'll see this on a move here. You'll see the move really jump, right? It'll really jump. You'll see a shallow pullback, a higher high in price, and a little trap below that low. Now watch, because these will oftentimes combine off the low of these channels, right? So watch out for those little traps down there, little 2-try trap as we go. But bottom line, though, is if we do get some more momentum running higher here, I will be looking to find a new channel by drawing it backwards. Draw off the highs, draw off the lows here. And then what usually happens in these situations is you'll get just below the moving average, right? The bears will try to sell short off the EMA. Once they commit, we know where their stops are. We can buy into stops, and we can buy the pullback, right off of that right off the moving average, right? So failure pattern into pullback pattern, and again looking for that full rotation back up where we came from yesterday. So those are some things to consider here as we go higher. And again, if this thing just rips higher here overnight, watch for that shallow pullback, that higher high. That's where you know buyers are waiting. They're waiting right below that low with a 2-try trap pattern. The other thing I was thinking about earlier too was, because we have all that bearishness, if the market rolls over and runs lower, right, keep your eyes open for a retest, right? Basically finish off what they want, and then I'll be keeping an eye out for a crown reversal, right? 1 try for the bears, 2 try for the bears, bears try twice to keep it going, right? They can't keep it going, and we start seeing traps, right? Again, crown reversals, traps off the lows, right? Bounces off rising support, right? This is where I'm looking to be a buyer if the market can finish off that move. Remember, got to be careful whenever you see a real strong move like that, because the odds are pretty good they're going to retest that low at some point tomorrow morning. Then once they get what they're looking for, then I can wait for bears try once, bears try twice, grab those traps, grab those trend lines, right, and buy that reversal off of that low. So there's no shortage of buy setups, that's for sure. It's just we got to see a little bit more information right now. Like I said earlier, it'll be even easier if it just runs, right? If we can get some momentum going higher here, it'll be even easier for us, right, as this market pushes higher. So S&P, again, relatively easy plan. I'm looking to trap the trappers, right? Looking to basically buy into or sell into, right, those buyer failures for move back down. Don't forget everything I've talked about so far, all these patterns, the reversal patterns, the breakout patterns, the failure patterns, those are all covered in detail in that free trading class. And of course, I'll send you guys hundreds of examples of how we apply those patterns to our favorite futures markets as part of that free trading course. So grab that link in the upper right-hand corner. That way, the next time we work together, you'll know exactly what I'm talking about when I say failure into pullback, right, combination. All right, how about some oil here? Oil. I was laughing earlier with our team here in the office because today the Saudi oil minister was on record by saying the worst is over, right, for oil. And I'm thinking, does this guy know how to read a chart? It doesn't look like the worst is over here, brother. I mean, I like your spirit, but whatever helps him sleep better at night right now. But according to the Saudis, the worst is over here. Now, they do kind of lead the way as far as oil production globally. They lead OPEC. So we'll see. But it doesn't look like the worst is over here just yet. But again, this could be in response to accelerating COVID cases, potential new lockdown measures. We heard about new lockdown measures in Germany today, France today. I saw some protests against lockdown measures in the UK right now. So as these numbers keep going higher, right, the cases, again, I wish they would compare those to deaths. They don't do that for us, though. I wonder why. You can probably think about why. But it's easy to see this may have been caused by the fear of lockdowns and that lack of consumer demand, right, for oil. So we can definitely see another weekend gap, right, big weekend gap down. Again, what is a weekend gap? Weekend gap, of course, is Friday's closing price, right? There's only a small difference here, right? Friday's close, Sunday's open. But you've got to think, though, with that big of a move down, though, a lot of sellers probably missed that opportunity to get short up there. That gap at 78 will be a magnet for the rest of the week this week. What else do we see here right now? We are 3 legs down, right? 1, 2, 3 legs down. Most trends, when they go 3 legs, they're going sideways, the following day. So I think you can easily see that trading range I have drawn here. Now, this, of course, is not as dramatic as we saw in the S&P, but 3 legs down into a trading range. We know we're bearish. What do we do with a range, right? What is a range? Ranges are balanced, right? They're balanced markets. Ranges become magnets. What do? We buy low, we sell high, we focus on failure patterns, right? Now, we get a bear market right now, right? Bear market right now. With a bear market, we obviously want to focus on selling rather than being a buyer right now, right? We want to focus on selling rather than being a buyer. Right? Buy low, sell high, except in this case, it's just sell high because of the overall bear bias we see right now. So I would call this a bear market into a range. I would also call this a bear market into a wedge, right? Kind of see that wedge I've got drawn in there, right? All of them give you lots of support down here around that 38-30 area. So I'm trying to find a level of resistance that I can get short on right now because I want to sell above the top of this range. And from what I can tell, I think the best clue is, again, I'm taking the size of that range there, and I'm using the size of that range to help me find my sell zone. Right? Very important little technique there. You guys will learn more about that in our free trading classes, like I mentioned earlier, right? Again, all the links in the description of this YouTube video. So I'd like to get up around these highs, right? And of course, I'll focus on failure patterns, right? If we do get up that high. One thing to keep in mind too is if you draw a trend line off of these lows and then bring it up around those highs, what do you see? Yeah, kind of like a little hidden channel, right? That's a pretty cool spot there. I like how that lines up right with that kind of battle zone, that sell zone that we have overhead. I think at this point here, there's no doubt about direction. There's no doubt about where I want to get short, right? I think the big problem, right, or the big question mark in everyone's mind right now is what will we get? Right? What we get. I think the big thing here is there's a few different scenarios. I could easily see a potential trap above that high. Right? That's one scenario. I could also see potentially a deeper pullback, right, around the top of that channel. I could also see, too, that 39.33, a lot like on the S&P. You got that big low, right? Prior low there. I could also see potentially a relatively strong push higher as well. So let's put these together. Now on the oil too, if we push lower, look how much space they have down there, all the way down to that. What is that? 37, right? All the way down. So a ton of open space down there for the bears. A lot like the S&P, right? Both down. There's a big wide open basement below this range here right now. So definitely not as tricky as the S&P, right? The S&P had a lot more bullish momentum that we have to be careful with tomorrow. The S&P is probably the most difficult market for tomorrow because of that bullish momentum. Here on this oil, this is kind of a walk in the park. There are three basic patterns that you want to look for here tomorrow. If I see, for example, I've got this resistance level at 81. One of my favorite entry patterns, if all we get is a shallow pullback. Remember, the range is the magnet, right? Range is the magnet. I don't want to get too aggressive selling short, too close to that range. So if we do pop our heads higher here, I'll look for what I call a trap entry, right? Now, I talked briefly about this. Well, not briefly, but this is actually the plan on the S&P. It's just a little bit different kind of formula for it, right? Same basic idea here. If we can get a little trap high above that high, right, what will happen is as the market runs higher, I want to sell the pullback. I want to sell the failure. The problem is, though, the range is too tight, right? Not a very good risk-reward ratio on a shallow pullback. The best way to enter on a shallow pullback above a range, don't just simply take the buyer failure and hope it collapses back down in, right? As the market pulls up, you wait for the buyers to try and sell back down in. Don't just take that buyer failure because it's right inside the range. Those will oftentimes kick back against you. What I'd rather do is wait for that kick back and use that kick as a chance to sell above the top of that range. So a shallow breakout, shallow pullback, right, above that 81, I'm looking for basically what is a bull trap. Let those buyers try once, let those buyers try twice. And the goal of this really is not to let the buyers try twice. It's just I want to trap, right? I want to trap. And the only way to really get that to work is to get this of a pattern just above the top of that trading range. Now, this could get a lot easier if the market pushes up into these areas of resistance overhead I got marked up. At that point now we get a lot more space now if those buyers come out and try to buy the pullback now I can sell short right into those stop losses, and I will have a good risk reward ratio. right? So you can't get a good risk-reward ratio in a shallow pullback, which is why a trap pattern is so important, right? Hopefully that makes sense, right? So shallow pullbacks, look for traps. Okay, deeper pullbacks right now, I can look for a failure. And if I really get lucky, moving average comes over, I can go failure into pullback combination. Buyer failure, price pops up, buyers try and they fail, we're selling into stop losses, right? And then of course, again, on that first pullback to the moving average. A lot of times what happens though, the market will go back into the range and you don't want to take the pullback there. So just be aware, right? That's not what you want to be doing, right? You want to be looking for that failure. And then if you can get the add-on above the range, by all means, but just don't force it, right? Buyer failure into, into seller pullback. And again, the range, of course, the range low is that target, right? Back down to retest those range lows. Another potential here is we get a bunch of resistance up there. Specifically, if this wedge, right? If this wedge really if it really kind of lives up to its potential, the sellers are going to be targeting this 39.16 high up here. That's kind of the edge of the wedge, if you will. And what you could do is almost put an overlay, right, on these two areas. And the reason why I point this out is because if the market really jumps, right, if it really jumps up into kind of this secondary area here, that momentum will be so strong, I'm not going to be able to aggressively get short. What I'll have to do in this situation is I want to wait for the buyers try once, lower low, try twice. I like to find a trend line off of those highs, right? That's one way I'll do it. But basically, it's called a nested failure pattern. Nested failure patterns are really, really useful, especially when momentum is a concern. Again, in this example I'm drawing up right now, the market is not reverse direction yet. It's just popped off its low. Now that pop, right, anytime we see a strong move, there's a good chance you'll see another leg. But again, it's not a bull market right now, right? It's a bear market. So we know that if we get the pop, right, again, up inside that high, right, 39, again, up inside these highs here, 39.16 area, that's a very bull pop now. Let them try once, let them try twice. And just remember, you're trying to sell as high as you can. Trying to sell that resistance. A lot of times what will happen is it'll go like this. It'll go one, it'll go two, and you want to try to get something up around those highs, right? So there's a little bit of nuance to these nesteds because you don't want to sell too low. You want to sell nice and high. So if you can get that, right? Again, if you can get it to go up, buyers once, buyers twice, get that trend line, bingo. That's the best one, right? But if you can't get that kind of picture perfect one, if it really collapses, look for those traps. Because a lot of times what happens is the market will run higher here. It'll pull back. It'll go once and then collapse back down. At that point now, right? Trend line there, you know what I mean? You're finding levels of resistance to try to sell as high as you can, right? But the same thing applies. Wait for the buyers to try twice. So just right there, I've given you guys a couple different examples of how I could be looking for, right, that nested failure after a big strong pop, right, tomorrow morning off of those lows. And of course, you can probably assume next, how does the market reverse direction, right? How does it reverse? Before we talk about the bull side though, what about the downside, right? What do I need to break free of this magnet? Remember, what is a range? A range is a magnet. Basically, a range is a magnet. It's where buyers and sellers agree on value ultimately, right? If you're a market profile theorist or an auction profile theorist, right? Like I have been studying auction I don't really use very much of it, but I use a lot of the principles of it, right? So ranges, of course, are magnets. So how do I break free of that magnetic field? I've got to see a strong move down. I've got to hold the pullback, and I've got to keep going. Right? I can't try to sell that first pullback, right? Selling that first pullback is, well, it's not suicide. It's a very low probability trade. You're more likely to see it go 1, 2, and back up into that magnet, which is also one of my buy setups for tomorrow. But if I can get a 1, strong move down, 2, pull back to the moving average, and 3, jump off the moving average, if I can get that, what I call a 1, 2, 3 breakdown, by all means, now we do have momentum on our side. We are separated away from that magnet. Now I can look for a short. I can mark up that low, I can mark up that high, and I can sell off the high of that hidden channel, right? Where's my target now? My target, again, down at that 37, as crazy as that sounds, right? So got a big move down potentially here if these bears can take this thing. Last but not least here, right? How do the bulls take this? How do we buy this market? Well, one way to buy it, as I mentioned earlier, is get this thing down to a new low, take out that triple measured move, take out that wedge, and then watch those bears struggle, right? Watch them try once. Watch them try twice. Once those bears try a few times, if I can get a trend line to get hit, right? Not a horrible trade. Again, because the range is a magnet, right? Not a horrible trade. Remember, just buy at support. Okay, that's the key. Sometimes what happens is the market will run lower, right? It'll pop higher. You'll see one try for the bears. It'll run all the way up now. And now you're like, okay, so now two, now do I buy right there? No, right? That's you missed it, right? At that point now. So it's very, very important that as the market runs lower, right, we want to buy as low as we can and buy at support, right? So one try, two try. Again, I draw trend lines off those lows. That makes for a great entry, right? Again, this is after we complete the retest. The range is the magnet. Bears try once, bears try twice, buying off that trend line. As you can imagine, though, that is the more aggressive, right, of the buy setups. The much more reliable is going to be, let's get a 1, 2, 3 reversal pattern, right? Let's get a strong move up. Let's see these buyers actually hold the pullback, right? And let's go and jump off the moving average. They've tried before, but they failed, right? So can they get it to work this time? If I can get a 1 strong move up, 2 pull back to the moving average, and I know I want to buy that first pullback too, right? The problem is, though, we're not a bull market yet, right? If you want to increase your winning probabilities, if you want to increase your odds of success, right, go with the trend. As I always tell my clients, momentum pattern signal. Momentum pattern signal. If you really want to improve your odds, make sure you're going with momentum, have a good pattern, a good level of support or resistance, and wait for the signal, right? And we cover all of that, by the way, in the free trading course, right? My 3-step strategy, you'll learn the entire thing, right? In that free trading class linked up in the upper right-hand corner. Back to the presentation, though, here. 1, 2, 3 reversal. Now we have momentum. Right? Now we have momentum. Now find the entry pattern. Mark up off that high, mark up off that low. Now find the failure into pullback combination pattern. Make sure you get the right entry signal. Right? Again, we'll cover all that in detail in the video classes, right? And of course, we'll do it together tomorrow morning in our trade room. Right? Got to wait for that turn, and obviously that weekend gap, that big round number overhead will be some easy objectives. So as you can see, I'm not afraid of the buy side whatsoever. I don't care what direction I trade in. All I care about is momentum pattern signal, right? Momentum pattern signal. What direction is momentum going in right now? Because that's the easiest way to increase your odds of success. All right, we're looking good here. As we open up in Asia here, let's move on with gold. Finishing up here on the gold market right now. Now, gold is pretty much stuck inside of a multi-day range. If you look left out there, right, a lot of range-bound stuff here. So it's a range-bound market. It shouldn't be too surprising with, of course, ECB on Thursday and the election next Tuesday. It should definitely not surprise you to have gold be a bit whippy, a bit range-bound here this week. Later on this week, again, ECB on Thursday. So all of that is going to be reason for reason to assume this market will probably continue its range-bound tendency here this week into next week. We'll see what happens, though, right? I mean, I'm not going to make any wild guesses. Right now, it's a range. Tomorrow could be a big trend for all I know, right? So I won't put myself that too badly in a corner there. But what do we know about the gold right now? We know there is a bullish tone to it. We know there is a range on it. Right? So first of all, we know we're bullish. What do we do in a bull market? We buy. We buy where? We buy at support levels, don't we? What do we do with a range? We buy low and sell high. So as you can imagine, I use that range, find the buy zone, use that range, find the sell zone. It's going to be easier to be a buyer right now than it will be a seller and buying underneath that trading range. Not to say I can't sell above the range, but I have to be more disciplined, right? I got to be a little more conservative, something about the high of that trading range. You'll also notice too, I've got my trend lines above, my trend lines below. Those are usually the sweet spot when it comes to entries and exits, when it comes to a trading range. These kind of expanding triangles, right? Market rotates back and forth, right, inside of these expanding triangles, buying off the lows, selling off the highs, taking profit, right, on your rotations. So, I'll tell you, the gold market is, it looks like one of the easier markets for tomorrow. Oil's relatively simple as well. I think the biggest thing right now is we've got this, again, range acting as a magnet. I want to get down underneath this trading range, get down into some areas of support. I've got that pendulum swing, so I know exactly where I want to be going, right? I know exactly where I want to look. I've got momentum on my side. If I can get this run lower, finish off that pendulum swing, what I like to do is get those bears to come in, right? Get that push lower, get those bears coming in, get some sellers selling off the pullback, right? Get them trapped on the wrong side. That will tell me right where those stops are, and I can look to buy right in the stops. And then again, if I have enough space, I can buy that pullback, right? That first pullback. So failure, again, off support, below the low of the range, failure into pullback combination. Another pattern I'm watching for, if you look left here, you can see we do have that big bear move down there. So they did already get their retest, right? You'll notice if you look a little bit left here, we had that big move down last week, right? Anytime we see a strong move in one direction, what do we expect? A retest of that low. I'm looking at you, S&P, right? This is exactly like the S&P will likely be for tomorrow. But again, a lot of stuff going on right now, so the chart tells us what it wants to do here. But statistically, though, once they retest that low now, as we bounce off that low. What I'm getting at here is if we can make a strong move down, if it really runs lower, I have no problem being a buyer back up. I'll just have to use that nested failure pattern to avoid being too aggressive into it, right? So you got this support zone down here at 1896. If we make a very strong run down, which would not surprise me, again, this range acts as a magnet. I've got major support here, but I just get a strong bear move down. So what do we do when the momentum is really strong? We allow the sellers to try twice, right? Ultimately, we allow the bears try once, right? Try twice. Again, I like to find trend lines to make sure I'm buying off support. But the reality is there's a lot of different ways you can find these nesteds, right? These nested failure patterns. Again, I call them nested failures because there's one inside the other. Right? They're not your straight failure into pullback combination, right? It's like a failure inside of a failure, right? Strong move down, moving average comes over, bears try once, higher high, right? Drawing that trend line now, bears try twice, range, right? Range acts as the magnet up here, and we're buying basically into stop losses from those bears. Now, there's other variations of this, right? If it runs lower, we may see one go up quickly here, right? That trend line is not going to allow me to buy low, right? That type of steep trend line is not a very good fit. In those situations, what I'd rather do is wait for that pullback down again, get that deep pullback, buy off support levels as low as I can get. It's the same idea, right? Sellers try twice. But it's making sure you're buying as low as possible, right? Does that make sense? If it does, how about a thumbs up here on the video tonight? Because that's one of the most important things about trading reversals, right? Hashtag reversal, hashtag breakouts, right? Hashtag still here, right? 45 minutes here into this lesson tonight. So thank you so much for tuning in. As always, make sure you subscribe as well that we don't miss tomorrow night's lesson as well. So breakout failure is going back up into this range right now. If it goes higher, right? How do I buy it as it goes higher, right? Strong move up. Don't buy the breakout, that's for sure. Hold the pullback and jump off the moving average, right? Mark up that high, mark up that low, find that hidden channel, and we're buying off that low. Where would the target be for these buyers? We got one up at 1917, right? Second one up at 1923. The granddaddy of all the highs, right, up top here around that 1936, 1935 area. We'll take one thing at a time, though, for tomorrow. If I want to be a buyer on this gold right now, I've either got to get underneath this range and do it with a failure pattern, or I have to go strong move up, hold that pullback, jump off the moving average. Again, they didn't do it there, right? They've yet to really, right? They've yet to prove that to us. Prove to us this magnet isn't there. right? Again, I'd love to buy the first pullback. But last time that happened, it failed. So you can't trust it. Mark up that, right? Mark up that high, mark up that low, find that hidden channel, failure into pullback combination off the low of that channel. And again, I talk a lot about these failure into pullback combinations in all of our trading classes. All right, so those are my three kind of go-tos here for the buy side tomorrow. How do we sell this thing? Well, first of all, if the market runs higher, I don't have any problem selling above the highs because it's a range. But if it goes higher here, there's two big problems. One is we're bullish. Two is we failed rotation. So if the market runs higher here, again, I don't think I'm quite ready to buy that first pullback yet because of the range, right? It definitely lends credibility to the buyers though, right? But if the market runs higher here right now, what am I worried about? I'm worried about momentum. And what's the best entry pattern to avoid momentum? Nested failures, right? You see, you're getting it. You're getting it. Buyers try once, buyers try twice. Do we get the trend line to sell high, right? That will be great, right? Or, does the market, do we go 1, 2 back down? Again, that trend line's too low. See the difference there? Right? There's a big difference in those two examples that it's shown. In that situation, wait for it to pop. Right? Get up around some of these highs, right? Draw that trend line there, poke it overhead here, right? Grab it there. Hopefully that makes sense, right? Hashtag light bulb moment down in the comment section below, right? Trap those trappers. Let those buyers dig that, right? Let them dig that hole, right? And sell right into those stop losses. So again, I can be a seller there, but I'm going against momentum on that. So use a different pattern. And then as far as selling this short as it goes lower, we have a hell of a lot of support down here. So the only way I can justify getting short as the market goes lower would really be one of two scenarios. One would be a 1, 2, 3 breakdown. Right? Strong jump off the moving average. Find the low, find the high, sell that first test, because after all, the first test is always the best test. Or we'd have to completely nosedive, right? And then there'd be so much momentum down there that I can easily grab a channel now, right? Get above the moving average and get one of those buyer failures, right, above the moving average. So if we do see enough momentum, remember, anytime you see enough momentum, it's almost a guarantee we retest that low. So I will be definitely keeping my eyes open for that tomorrow. With the VIX spiking above 30 today, it does seem a bit unrealistic for that. But hey, election time is here. Stimulus talk is here. So this could easily, right, go lower here tomorrow, right? We're kind of waiting to let the market tell us what it wants to do. But for right now, though, looking to be a buyer here on the gold. Hopefully, I know I covered a lot tonight. I know we covered a lot. There's a lot going on this week. Busy week here. Most important thing, though, is you don't have to do this all by yourself. Tomorrow morning, we're going to break this down, and we'll do it together. What I'll do is I'll put all the links you guys need again to get registered for tomorrow morning's trade room. That way you can come out and do it right there with me. Follow the rules, follow the worksheets, right? And we'll put all the plan together tomorrow morning and do it together in the trade room. Again, grab the link, get registered for tomorrow morning's trade room. Don't be afraid to call the office if you have any questions. And also, too, don't forget we got live chat pretty much all over the place on our website. So grab that chat, right? Call the office. Whatever you do, don't miss this week in the trade room. It's going to be a great week here as we go into this election next week. In the meantime, though, don't forget, I hope you guys subscribe to our channel. I hope you'll drop a question in the comment section if you got any questions. And I hope I'll see you tomorrow morning. If not, we'll see you guys tomorrow night. Next edition of our newsletter is tomorrow night, about 23 and a half hours away. I will see you guys then. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.